Good morning, everyone. It's licensed Illinois real estate broker with Exit Strategy Realty. My name is Shantae Collier, and I am bringing to you another segment of Let's Talk Sense. Remember, we air every Thursday at 9 a.m. Today's topic is tax time and all about money management. So, something that a lot of you probably do not know, I actually used to be a tax preparer some years ago. I actually really liked doing it. I was with a company that is no longer open called Instant Tax Service or Instant Tax Refund. I think that at some point in time they may have changed the name, but I started out as an office manager with them and a tax preparer, and I was with them, I believe, about 3 years or so as an office manager and tax preparer. And I ran into a lot of people. I got an opportunity to talk to many different people that would come in. And of course, as you know, with most of the tax companies, the biggest thing is the rapid refund. I mean, everybody wanted a rapid refund. There was rarely many people that walked in saying, hey, I want to go the, standard direct deposit into my checking account route, and I'll wait the 2 weeks. So, of course, when you do a rapid refund, you're going to pay more because you're paying more for that speedy service. And actually, what some people may not know, when you're doing a rapid refund, basically when your information, when your tax return is processed and it's ran through the system, on the back end of it, the company will get a red flag whether or not they should extend you the loan, because technically you're getting a loan. The IRS does not. Listen to what I'm saying. The IRS does not process tax returns within 24 to 48 hours. It is humanly impossible for them to do that. You have to think about it. The IRS is not like the state of Illinois, and neither does the state of Illinois. Neither entity processes tax returns that quickly. But the IRS, which some people tend to get it mixed up, the IRS is taking care of the entire country, whereas the state of Illinois, which is the Illinois Department of Revenue, who processes your state tax return, they're only taking care of the state of Illinois. So basically, when you walk into one of these companies, whichever company you choose to go to, if that's how you choose to file your refund, they're actually loaning you the funds. And then once your actual tax return is processed somewhere down the line, could be 2 weeks later, could be 3 weeks later, however long it's going to take, that's how the company is reimbursed. So if you've ever gotten a refund within, let's say, 24 to 48 hours, and somehow there was a glitch, something happened down the line, and then they're coming after you, that's why, because they actually fronted the money up front and then expected to receive it on the back end from the IRS, deposit it into their account. However, when you go into places like that, when you file your taxes, they're charging you, your standard filing fee, your standard preparation fee. Because they have to make money too. So like with any business, you go into Walmart and you see a roll of paper towels for 89 cents. Well, Walmart has to purchase that from somewhere. They also have to get it delivered to them. So they have to make a profit somehow. So when you go into these companies, like any business, everyone's making a profit. That's their bread and butter. That's how they're living. That's how they're supporting their family and so on. So you're going to pay extra. And I'm a penny pincher. I refuse to give anybody any of my money. I just feel like if I can do it myself, I am not going to give you a dime, a penny of my money. So with that being said, like I said, this topic is all about, because it's tax time, and money management. So for years, actually, when I worked for the tax company, I used to actually process my tax refunds through them. And that's because I received a huge discount. So if someone else was paying $300, I was probably paying like $50. So I was okay with that. However, after I stopped working with them, I actually started doing my taxes on TurboTax. And that's what I've done for years. Because I was a tax preparer, that did help me to understand a lot of the tax laws and things like that. However, TurboTax is very self-explanatory. You can save gobs of money, provided you're not trying to get the instant refund. And I'm assuming tax companies still do that. I haven't walked into a tax company since I worked for one. So that's number one. A way to save money is to prepare your own tax return. Why pay the people out there. I'm not going to go and name names. You all know who the companies are. Why pay them $300-$400 or whatever it's going to take? And the more forms you have to file, the more they charge you, because they do charge per form. So they have like their standard fee, like it starts at this amount. You know how you see companies that say, this starts here, but it can go up to whatever the dollar amount may be. That's based upon what you actually, your personal situation. So if you have children and need to do earned income credit or child tax credit, those are two separate forms. They're going to charge you for those two separate forms. If you're self-employed and you need to do a Schedule C, you're going to, pay a little more additional for your Schedule C, especially if you have a Schedule C and you work and you were a W-2 employee, meaning you actually got paid by a company who took out taxes. You were not considered self-employed or independent contractor. Now you have that 1040 and plus the Schedule C for being self-employed. And then if you have, let's say, if you're a homeowner and you have property taxes and, your interest from your mortgage, you're going to itemize that on a Schedule A. So I'm not going to get into a whole tax preparation, 101 with you guys, because I'm, just here to talk about saving money. But the point I'm trying to make is that you're paying, per form here, per form there, when you're, when you can easily go onto TurboTax. Believe me, it's self-explanatory. Maybe the first time you do it, it may take you a little bit longer, but it will actually walk you step by step by step. I don't necessarily have to do that because I know exactly what I need to file for my personal situation. But if you just take a Saturday or whatever day you're free and, start doing your, taxes on TurboTax. So you don't even have to go there. I mean, TurboTax isn't the only company out there that you can go online. That's just my preference. I believe H&R Block has something where you can do it online. And there's a few more companies, but it will save you a ton of money. So that's number one tip of money management during tax time. Another thing you can do once you do file your refund or file your income taxes, and if you are receiving a refund, and hopefully you are and you don't owe the IRS, because that's a whole another story and a whole different headache, save the money for a rainy day or an emergency fund. One thing I do not like being broke or low funds. It's nice to have something that's a little cushion for a rainy day or whatever it may be. It doesn't matter what the number is. Just knowing that you have a little something there, even if you can only put away $100 or whatever that number may be, just knowing that it's there and being disciplined enough to not touch it. That's the key. You have to be disciplined enough to not touch it at all. So, tip number 2, put some money aside for a rainy day or an emergency fund. Tip number 3, something else you can do. If I do not believe in saving money if you owe money. There's no such thing as, I'm going to save this money, but I also owe creditor A, B, C, D, E, F, G. No. You need to get rid of your debt. The debt will always be there, especially if it's interest bearing. If you have debt, you owe a creditor and it's accumulating interest on a daily basis or a monthly basis, however they're compounding their interest, get rid of it, or at least pay it down, because the more of the principal you can pay down, the less interest is going to accumulate to that principal amount. And if some of you do not know, when you pay your credit card bill, and let's say they say the minimum payment is $50, but throughout that statement month, the interest was $30, that $50 of that $30 that you just paid is going to go toward the interest. The other $20 will go toward the principal. So if you owe $1,000, they're going to say, okay, well, we're going to put this toward the interest, because they have to get their money. That's how they get their cut. That's how they profit from extending you credit. And then that $1,000 that you owe, it's only going to go down by $20, because remember, you only paid the minimum payment, which is $50. So if you want to get ahead, what you need to do is pay your minimum payment plus the interest amount. So if your minimum payment is $50, but $30 in interest accumulated for that statement period, pay the $30 plus the $50. That way, the $30 will go toward the interest, the $50 will go towards your principal. So pay off your debt, especially your high interest bearing accounts. Very, very, very important when it comes to money management, because if not, you're going to constantly, you're going to pay on a $1,000 credit card for 10 years. Why? If you have extra funds, pay it off. There is no such thing as saving money when you owe creditors, regardless if it's delinquent debt, current debt. Get rid of it. Why chalk out extra money every month to them? No need. Another thing you can do is spend the money on something you really need. Maybe you're having some car issues. Maybe you need to do some home improvement things to your house. And I say something you need, not something you want. You know, you don't have to go out there and get the new 2019 vehicle or whatever. Something that you truly, truly, truly need. So if you have to make a list and say, hey, you know, this is, you know, make a list of needs versus wants. What are you in dire need of that you could definitely use that money to benefit from? Another thing you can do is invest the money. So if you don't know a lot about investments, I don't suggest going and getting into stocks unless you know someone or you can get some type of good guidance. So don't just go and chuck your money over and say, I'm going to go invest in Apple or Microsoft because, you know, you feel like that's the more safer route or the popular route to go. If you don't understand how stocks can increase and fluctuate and things like that, I don't suggest doing that. But you can do something like a money market account, an IRA, something that, you know, or a high interest account, or high interest savings account, something that will earn you a little bit more interest than your standard accounts out here. Usually you have to open them up with a certain dollar amount. That's how you're going to get the higher interest. And some of them won't even open up an account for you without the higher dollar amount. But just look into it, do some research. You know, like I said, these are all just tips. It's totally up to you if you choose to use them. And then lastly, something that I want to do next year, because I want to do it kind of big, I want to do a family vacation. So I'm not looking to just take a lump sum of money and just throw it, you know, oh, let's do a vacation this year. It is something that I do want to be able to save a little bit, you know, month by month. But if I do get any extra funds, I want to make sure that I do take some of those funds and put it aside for a nice family vacation. And when I say a nice family vacation, I mean somewhere where it's going to be passport worthy. You know, we can go all across the 50 states in the country. We can, you know, practically do that at any time as long as it's within the budget. But I want to do something really nice, you know, for my kids and take them out of the country. But I got to work on getting passports too. So that's a whole nother story. So to kind of recap on our It's Tax Time money saving management and money saving tips, number one, try preparing your own tax return. If you run into any issues, you know, there's always forums that you can go to. There's always a help desk I'm pretty sure that you can call, or you can ask a friend, family member, to kind of help you walk through the steps, as long as you don't mind that person being in your personal business like that. And that way that'll save you hundreds of dollars versus going out here and having a tax company prepare your taxes. Paying off the high interest debt. Spending the money on something you need, and then investing in the high interest bearing, or like a money market account or an IRA, and then family vacation. I know family vacation isn't really, you know, saving money, but it's very important as far as bonding with the family. I think, you know, over the past couple of weeks, I've kind of touched base on that with like time management and things like that. And it would be definitely a good way to, if I'm going to spend out some money, like I said, I'm a penny pincher. So if I'm going to spend out some money versus saving it or using it for something I really truly need or something that's really beneficial, I would at least want to spend it on my family. I truly don't believe, and this is personal preference, no pun intended, I just personally don't believe in going out and getting a brand new car, brand new furniture, just because I got some extra funds, if I'm due some extra funds. And I'm not saying you should or shouldn't do it. I'm not placing judgment on anyone who has done it or will be doing it. I'm just saying, you know, I like to, you know, give money saving tips because I am in the business of, you know, helping people self-improve and investing in themselves. So thank you for joining me this morning. As always, thank you for your support, and join me next week, Thursday at 9 a.m. for Let's Talk Sense. Until then, have a wonderful day.